Hey guys, thanks for joining me today. Today we're going to get into all the money questions. So I'm sure you have a lot. There's a lot to go into, a lot to think about. And I really just want to dive into what that loan process is like. And I'm going to interview somebody amazing. His name is Ryan Maddox. And he is a loan officer here on Island. And we're just going to kind of break down all the things. But if you happen to miss our last few videos, please go back and watch those first because that's going to get you through the initial mindset you need to be in if you're ready to buy a house, determining whether things are a need or a want, and then we'll get into this loan process. So if you're new here and you're just joining, my name is Marina Tolentino. I am with the Ferris team, brokered by eXp Realty, and I'm just an expert in the real estate industry, not claiming to be in finance whatsoever, but just an agent that wants to share some information. So let's dive in. All right, so before we jump into all the money things, there's some initial questions I want you to ask yourself to really determine if you're even ready to start this process. Number one, do you have a lot of credit card debt? Do you have a car loan? Do you have a big personal loan that you're trying to pay off? What's your cash flow like at the end of every month? Do you even know what cash flow is? Have you done the math? Are you on a budget? These are just some basic questions to kind of figure out if you're really ready to start talking about big numbers and just seeing if this is the right time for you. Also, have you been checking your credit score? What does that look like? Is it something you can work on in a few months, or are you ready to go? Are you at that 750 point and you're golden? And do you feel like you have extra money at the end of the month? Are you able to save? Are you able to put some aside and not feel like you're living month to month? These are big questions that a lender is going to look at to really determine if you can afford a home. So you've answered all the questions, you're feeling ready, you're feeling confident, and if you're not there yet, it's totally okay. No judgment. Like literally everyone has been through this process where they've had to fix their finances, they've had to take some time, reorganize, reorient their goals. And my husband and I are even going through this right now, right this second. So the past 4 years, we've spent building businesses, creating businesses. And now in 2020, we've decided this is the year we're going to get really intentional, thanks coronavirus, towards saving for a home. And so it just takes a different mindset. And instead of building a business, we're building savings. So it's definitely something not to feel criticized or shamed by if you're not there yet. There's time and there's plenty of resources to get you there. So I just want to empower you. If you feel like buying a home in Hawaii is impossible, it's not. It just takes the right education and the right mindset to get there. So that's my job, is to help make it as easy and as fun as possible. Since I am admittedly not a finance expert or anybody in the finance world, I wanted to bring in somebody who is, and that is one of my favorite vendors that we work with, and his name is Ryan Maddox. Ryan is a lending officer here on Oahu, and he's in the know. He knows the market. He works with buyers every day, 5 days a week plus. He's really easy to work with and just like instant on text. He's great. Any questions we have, he just breaks it down so it's simple, not scary. And I just want to preface this because I know anytime we talk finances, it's easy to get really uncomfortable. You know, it's kind of like opening up that underwear drawer. It's a little bit unnerving. It's like, oh, you're going to see my bank statements? What? But I just want to tell you, this is what he does for a living. This is what all loan officers do. They work with everyday buyers every day. So there's nothing they haven't seen before. Well, I'm sure there's some things, but most of the things they've seen before, they've overcome them. They've been able to help their clients get the best possible outcome. So without further ado, here's our interview with Rylan. All right. Hello, Rylan. Thanks so much for joining me. And I'm so excited to kind of share today more about you and kind of what the whole process is. So first, can you just tell us who you are and what you do?
Yeah, so my name is Ryan Maddox. I'm currently one of the co-founders of the High Five team with Preston Sims. Right now, there's about four of us: Preston, myself, Kira, and Stephanie, who are our assistants, our loan partners. And I'm 34. I was actually born in the Philippines. My dad was an Air Force pilot. I moved to Mississippi when I was 2. Grew up there most of my life and had some family in Hawaii, so always visited. After college, I kept looking for a job opportunity out here. I loved Hawaii so much, visiting when I was little. And after kind of trying a few different sales jobs, someone got me into the mortgage industry. And that was about 8 years ago, and I haven't looked back since.
That's awesome. That's crazy. I didn't know you were born in the Philippines. Wow. That's nuts. So you have a lot in common with a lot of people. That's awesome. Okay, so let's say someone's interested and they don't know where to start. What's the first piece of advice you'd give for a first-time home buyer that thinks they're ready to start the process?
Honestly, the first piece of information I tell a home buyer is just actually to start the process. A lot of people wait, or they think that their credit's not in the right place, or they still want to pay down some debt, or they're not making the money yet. Especially, we have a lot of military that aren't here, and so their Hawaii pay hasn't kicked in. The first step is just to start, because your application, at least with most lenders, it's a sandbox. You can tell the loan officer, like, hey, I'm going to pay this off, or I'm gonna have my house sold, or I'm working on my credit. And we can hypothetically look at where you would qualify to if we do those things. But what that also allows a loan officer to do with a client is to see where they actually are. Because I've seen everything. I've seen people who thought they had bad credit actually have better credit. I've seen people who thought they didn't have any issues actually have some either identity theft or red flags on their credit they weren't aware of. So the best advice is just to start, to know for sure where you are, and not let things that may be changing in the near future distract you from, or keep you from starting the process early.
Yeah, for sure. That's good. Is there anything you wish people would do more before reaching out to you, like in preparation?
Just general financial advice. Just, it's really important to, it seems simple, but pay your credit card bills on time. And while it's not the best to track your actual credit score, having some sort of credit monitoring, either through, like if you have a USAA account or your credit card or even Credit Karma, just to, again, not so much to track your exact credit score because they're not super accurate for the number,
Yeah.
but they are really good for pointing out, like, if there is like a collection account or something like that. And it doesn't even have to mean like you were irresponsible. I can't tell you how many times I see like a Verizon or a cable company put a $20 like return fee on when you cancel and move. It
Okay.
happens all the time. And if people don't know about it, it sits on their account for years and they never get alerted, they never get told, no one reaches out to them, and it just wrecks their credit over years of this $20. So just having some sort of monitoring to keep that from happening goes a long way.
Yeah, that's good. And there's so much too that we just, yeah, it's all in the background and we never think about it unless there's like a red flag in front of our face. So that's so true.
You think they would like call you or mail you, but they don't. They just let
Wow,
it sit. Yeah.
these guys. Okay, so let's say buyers are ready to go, they're committed, they think they're in tip-top shape. What's the first thing they need to know? What documents do they need to have ready? And kind of walk through what's the pre-process.
Mhm. So, kind of the first step is going to be just contacting the loan officer or just saying, I'm interested. I have a website, and a lot of times, if like they're speaking with someone like you, a realtor first, then we do kind of like a group text, and that works really well just to introduce everyone. Um, and the general overall process is kind of in two parts up front. We need an application, and I can either take that over the phone or in person. And
Mm-hmm.
that's like you just physically telling me all of your personal information, name, social, date of birth, stuff like that. Or a lot of lenders nowadays have online apps, and a lot of people find that to be really convenient. They can do it at night after work, and kind of work through it at their own pace. So that application is the information piece. And then your documents is going to be different for everyone, but the standard is going to be some sort of identification, driver's license, passport, how you make your income. So whether you're self-employed, W-2, 1099, or whatever, we need to verify that. So it could be W-2s. If you're self-employed, it's your taxes, basically, just what you tell the government you make. If you're salary, we just use what your job pays you, basically. And if you're hourly, same thing, but we just make sure that your hours are consistent. So if you're hourly, but you're making like 20 to 40 hours and it differs, we'll do usually like a 1 to 2 year average. So pay stubs and taxes, and then bank statements. Generally, loan officers will ask for 1 to 2 months of bank statements. We don't care so much what you spend your money on. Mainly the reason we have to have that is first off, just to verify the balance, make sure that you have enough money in your accounts to pay for whatever you're
Yeah.
potentially wanting to buy. And then two, there's a lot of regulations we have on us to make sure that we're not assisting with money laundering. Because when you buy a house, you put money into escrow, and when you close on the house, you potentially get money out of escrow. And if that money has come from illegal activities, then it's been quote unquote washed, which a lot of people were doing back in the day before all these checks and balances went in. Unfortunately, a few bad apples ruined it for everybody. And so we just have to track every dollar that comes into a purchase transaction and goes back out.
Gotcha.
So that's really, yeah, a lot of people are like, why do you need to see my transaction histories? Trust me, I don't want to. I
Yeah.
wish I could just see your balance. But we're required to show all that sort of stuff.
Yeah, that makes sense. And it's good to be aware because for a lot of people, they're like, oh, well, it's like looking in my underwear drawer, like it's scary for them. So it might be something to keep in mind. Yeah.
Yeah, I've had a couple of appointments over the years where we pull a credit report and the husband's like, Victoria's Secret card, what's that? It's like, I'll step out of the room. But yeah, we do unfortunately see everything, and we kind of, and even myself, like we gloss over it, but we're lending people hundreds of thousands of dollars.
Yeah.
And while it seems like we try and make it a very streamlined and seamless experience, especially for the client or the customer. But at the end of the day, it is a lot of money, and so you are, as a borrower, you are going to be showing your entire financial picture, and it can be very revealing, I guess. And so I try not to take it lightly that people are kind of showing us, everything about their financial lives, and sometimes even more. But yeah, basically identification, income, assets. And like I said, it's going to be different for everyone. If you own properties, we'll need information on the houses you own. If you have multiple businesses, we'll need information on that. But that's kind of the summary.
Yeah, that's
Income,
good.
assets, ID.
Okay, and that's all for pre-qualification or pre-approval, and what's the difference?
So pre-qualification is really just that application part, that first part that I mentioned. Pre-qualification, they exist. I really don't like them because what it really is that we pull your credit and there's no red flags, and based on what you've stated to us, we maybe could qualify you to X.
That's all kind of like hypothetical.
Yeah, well, it's all hypothetical, and it could be good or bad because everyone, some people don't know everything we have to consider, and some people tell us more than we need to consider. And just for instance, something I've always kind of laughed at, we don't consider gym memberships and cell phone bills and stuff like that in your qualification, because those things are voluntary. But car insurance, which if you have a car is required by law, we also don't count. So it's not as simple as being like a voluntary versus required debt. There's things we count and things we don't count. So a pre-qualification is just that initial app with a credit pull and you stating what you make and what your debts are. And so yes, it could be bad or good based on the pre-qual. If we only go that far, we may determine that you don't qualify for what you want, but when I get your documents, I may find things that we can use and get you qualified. And the reverse is true as well. You may think you're qualified based on a pre-qual, and then once we get your documents, I find something that keeps us from getting there. So a pre-approval is just a pre-qual with the documents to verify the information. So when we collect the pay stubs and collect the taxes if needed and stuff.
Yeah. And how long does that take once they give you all their stuff?
So depending on the person's individual situation, I can pre-approve, let's use an active duty service member, for example, in 15 to 20 minutes. I'm just pulling, it's once we have the application in and I have like their LES is really all I need on active duty because I can pull the pay directly from DFAS online. I can pull their credit report in their application. And that's really all there is to it, as long as they don't own other properties or have like side businesses. If you have someone who's like K1, has S corps and LLCs and owns multiple properties, it can generally take us up to a day or two if we're having to calculate through self-employed taxes and business returns and stuff like that.
Gotcha. So someone like me will be much more complicated than an active duty.
It would be a little bit more, but it should
Yeah.
still be within a day or two, yeah.
Okay, cool. All right, so then let's say you have all of our paperwork. Maybe someone's got a bunch of credit card debt. How are you calculating that debt to income ratio, and what should someone be like shooting for? What's the goal?
Sure. So the credit card debt and stuff, like I said, when we pull credit, all of your liabilities show up on the credit report. And for the most part, that's what we go off of. With exceptions like childcare and a couple of other things that don't show up on the credit report itself, that's your debt. And we don't, like I said, your cell phone bill won't show up on there, your gym memberships don't show up on there, and we don't count that stuff.
Yeah.
Debt to income is most simply explained as all of the income you have coming in from whatever sources, your job, rental properties, whatever, versus the new house you want and the debt that you already have existing. So you basically have your debt and then plus the new house. And different loan products allow different ratios, but a safe one is kind of just 50%.
Okay.
Conventional loans go up to 50%, and VA loans can go above it, but 50% is a pretty comfortable place for most people to be. And you got to imagine that means that half of all of your income before taxes and before grocery shopping and all those other expenses, half of your income is going towards debt and your new house. So that's a pretty big amount if you think about it, because taxes can be 10, 20, 30%, and then your living expenses, right? VA loans can go as high as like 60, 65. VA is more based on how much money you actually have left over at the end of the month. And there's a calculation there called residual. Conventional loans hard cap at 50%. We cannot exceed 50% debt to income. And FHA goes in between 50 and 60 for max. And USDA, which you hear a lot, that's more the rural zero down option for civilians, non-military, that starts to cap out around like 40, maybe 41, 42, 43. And that's kind of the range.
Okay, good. I mean, it's interesting to just hear you talk about all these different things, because I think people don't understand that there's more than one option. It's not like, here's one loan, you must fit this one criteria. It's let's look at your situation and customize what's the best fit for you, which is really exciting. So that's good.
Yep.
Okay, so we kind of talked about credit score a little bit. Is there a number you try to shoot for? Like, what's the happy number? What's the minimum? What's that?
Sure. So again, kind of with those same products, and you in general have like 4 basic ones: USDA, FHA, and VA, which are all considered government products. And the 3 of those do individual things differently. They're good for different things. And then you have conventional, which is just everything else, kind of vanilla loans. Credit scores are looked at differently, mainly between like the Govy loans, FHA, VA, and USDA, and then conventional. For the most part, and COVID has changed this a little bit. For the most part, Govy or government loans could go down to as low as 580, especially VA, which doesn't have a credit score requirement to the VA. But a lot of companies put their overlays on it. Right now, we're seeing that we call them the what's the word? The entities themselves, the VA, the Department of USDA, FHA, they have put restrictions of a 640 credit score right now. So for the time being, 640 is the minimum for a lot of Govy loans. And on conventional, they're a lot tougher on credit scores. 640 is going to be pretty much the minimum. And then the higher you can get that credit score, the better the interest rate. That's going to be a really general outlook. The lowest, when you talk about, so the 5th type of loan besides those 4 is what we call portfolio, hard money, non-traditional. Think of it as just people willing to give money, kind of private lenders. And so I saw one the other day that would allow you to go up, I mean, down as low as 600,
Mm-hmm.
but you had to put like 40% down on the house.
Wow. Yikes.
So at the end of the day, there's usually a loan out there,
Mm-hmm.
but it's always going to be probably offset by risk somehow. Usually
Yeah.
more if your credit score is lower, you're going to need to come in with more money or you're going to take a higher interest rate. There's
Yep.
always a give and take.
Okay. So then also, if you have no credit, like let's say you've never had a credit card, what do you do in that situation?
So I actually just lenders sometimes can help with this. I try to where I can, but I actually just got a gentleman a credit score. We've been working for a few months now. The
Okay.
best way to do it if you don't have a credit score is one, make sure have a loan officer run your credit. It's not going to hurt you. And if you don't have a score, go to whoever you have your banking with, your checking or savings account,
Mm-hmm.
and ask them for a secured credit card. So what they'll do is if you apply just for a credit card up front, a lot of times if you don't have credit, you may get denied, but a secured card ties to your bank account. So if you have $500 in the bank account, that's how much you can spend on the credit card. It's
Oh,
protected.
okay.
And
That's
that
awesome.
reports, yeah, and it reports to the credit bureaus. So you're very unlikely to get denied for it. And it reports to the bureaus. And what you want to do is you want to spend some money. It doesn't have to be a lot. Buy a Snickers, get a tank of gas, just
Yeah.
put like 20, $30 on it and let it sit for a month. Make your
Mm-hmm.
minimum payment, but don't pay it to zero. And do that for about 2 or 3 months in a row. So the credit bureaus see that you're making on-time
Yeah.
payments and see that you carry a balance. If you just pay it to zero, for some reason in their eyes, you're not being responsible paying debt, you're just paying it off. So you want to leave a balance every month. Yeah, it's weird.
Yeah. Okay.
Um, and in general, it takes about 2 to 3 months and you should see a score pop up.
Okay. Cool. Okay. So let's say there's, well, in Hawaii specifically, what are like the top three loans that you do a lot of?
So mostly what I would say I do is FHA, VA, and conventional.
Okay.
If I had to pick the top three, kind of going back to the different loan types. In general, as a consumer, you don't want to do a lot of research on loans. You kind of want to let the loan officer determine what the
Yeah.
best product for you is and show you like these are all your options and I think this
Mm-hmm.
one's the best. That being said though, every loan officer, if you ever hear a loan officer say like I know all the loan types, I can do all types of loans, like use me for everything, not to say that they're not a good loan officer, but I kind of follow the jack of all versus master of none. If you're doing everything, you're probably not an expert in one of them. And
Yeah.
so my expertise definitely over the years has been VA loans. More than 90, more than 95, more than 98% of the loans I've done are VA. I know the handbook inside and out. I know the loopholes. I know where they're flexible and where they're not. In the same regard, USDA, if someone comes to me and they're like, hey, we didn't serve in the military, we don't have any money down, and we want to buy in an agricultural rural area where USDA would be good, that's a USDA loan just off the top of my head.
Yeah.
And I still may do an initial consult with them to make sure that they can't qualify for FHA, which I'm comfortable with, or conventional.
Mm-hmm.
But if it does look like it's a USDA loan, I have people I know that, they don't work for my company necessarily. I just know that they do a really good job with USDA
Yep.
loans. And so I send them that way. And hopefully, anyone that's watching this video and working with whoever they are, you hope that your loan officer is looking out for your best interest, even if it's not to their benefit. There's more than enough business. I mean, this is our job. It's what we do this because it's how we keep food on our tables and take care of our families. But there's more than enough business, and it's not worth it to me to try and figure out how to do a USDA loan when I potentially me messing up means someone doesn't get that house, or someone may end up homeless for a period of time if their timing situation doesn't work out. So I'm really, really comfortable with VA. And over the past few years, I've gotten a lot better and more comfortable with FHA and conventional, especially for first-time home buyers. Because a lot of what VA is very similar for first-time home buyer programs with conventional and FHA.
Okay.
But I'd say those are the top three that I do the most.
Yeah, that's awesome. And this is kind of off topic, but I remember going through my exam and they have you learn about the Hawaiian ones. So do you ever hear of people
Oh,
actually using like hula may and stuff?
I know about it, but kind of very similar to how I would refer out like a
Yeah,
USDA.
someone who
So
does it.
Hawaiian Homelands is actually an FHA loan. It's an
Oh,
FHA loan product behind the scenes. That's what it's supported
hmm,
by, and it's a government loan. I know people that do a lot, like that's what they specialize in is Hawaiian Homelands. And so I refer those out, yeah, quite a bit. VA, interestingly enough, if it's Hawaiian Homelands and they're a veteran,
hmm,
the VA does those loans themselves. They have loan officers in the regional center here at Tripler, and those loan officers, that's the only loan that the VA actually does themselves. All other VA loans are done by banks.
yeah.
Hawaiian Homelands is actually handled by the VA.
Okay, that's interesting. I don't think a lot of people know that. That's good. Okay, so you said you specialize in VA. That's like your fave. You get a lot of it. And I know we get a lot of these military buyers here too, which are awesome because they're blessed with this awesome BAH. So, can you kind of touch on your experience with military here and veterans that are relocating to Hawaii? What's just in general, what's the experience been like and any expectations they should know?
Yeah. So the biggest thing is kind of the elephant in the room, and it's the first thing they notice when they get here, and it's the sticker shock.
Mm-hmm.
I'm from Mississippi. A lot of military are coming from states where your average home price is 100, 200, maybe 300,000 is like
Yeah.
a really nice home. So you come to Hawaii and a 2 bedroom, 3 bedroom townhouse is costing you 500,000. It's like, whoa, I would, why would I buy something like that? Like that's so expensive. Especially for active duty. And the VA loan is so amazing because of the opportunities it allows, especially younger military first-time home buyers to
Yeah.
invest in that real estate. Is that your BAH and also your COLA? COLA's cost of overseas living allowance in
Mm-hmm.
Hawaii. It's anywhere from like usually $300 to $600 depending on your rank and your family size,
Yep.
but that's also extra pay they're getting to live here. So a lot of people want to keep their mortgage or their home expense at their BAH, but realistically over time I've seen that you kind of need to use BAH and a little COLA. It is usually the range that fits the family needs for size. But yeah, so the sticker shock is a big issue for a lot of people that arrive here. But the thing that I point out to a lot of people is that $200,000-$300,000 house in Texas, as crazy as it sounds, costs almost the same as a $500,000 or $600,000 single family home here in Hawaii because of the property taxes. The property taxes on that home in Texas are almost triple or quadruple what we pay here in Hawaii.
Wow.
And the monthly payment ends up coming out to be, I think my buddy just bought a house in Texas not too long ago, and his taxes were $900 a month. For that same house here, they would be, I think that was about a 300 something thousand house. His property taxes here would probably be 100 a month.
Dang.
So
Yeah.
9 times more. Um, it's pretty crazy. So while the price is a lot more, your overall monthly expense still isn't crazy amounts higher. And so people should definitely like just look at what their budget is and look at what the houses cost.
Yeah.
Um, but I would say that just kind of looking and not being kind of discouraged because of the prices is a big deal, because a lot of times the budget's a lot more in their range than they think. But the
Yeah.
sticker shock is definitely something to get over.
For sure. Anything like, let's say they get boots on the ground, they just landed. How has it been with the timeline, like with their 60-day window? Is that pretty realistic still?
It is. It is still realistic. COVID has definitely slowed some things up, but we're still closing purchases in 30 days. But a
Okay.
realistic timeline, if they, let's use worst case, they don't start the pre-approval process until they get on island and they haven't began looking at houses. They don't even know what they want. They get on island, then we can get them pre-approved in as little as a day, right? So let's say within their first week, they're meeting you, the realtor, they're hearing about a lender, they're turning in their application. Let's go work, kind of a worst case situation.
Yeah.
Within a week, they've begun the conversation and gotten their pre-approval.
Yeah.
TLA is, I think, still 45 to 60 days is what is being offered. I think it's 30, and then they can extend if they show their shopping.
Yeah.
So they go out, if they're pre-approved the first week, if we're on a quick timeline, then by the second week, hopefully that weekend and through that next week, they're looking at houses, they're going on showings, they're trying, and let's say they're submitting offers. Let's say they submit offers their second week, and let's say, again, kind of good timeline, their first couple houses aren't accepted. And they
Yeah.
keep looking, they keep submitting offers, and by the third week, they have an accepted offer. So now we're 3 weeks in.
Mm-hmm.
If you're looking between 30 and 45 days to close, you're right at that 45 to 60 day window.
Yeah. True.
So it's very possible, even under even under less than perfect circumstances, right? Like not getting pre-approved till you get here and it taking a week,
Yeah.
not looking at houses or not getting an offer accepted for 2 weeks. So very doable. Yeah.
Okay, that's good to hear. And I just heard too from a friend, they were saying that the 14-day quarantine is not an extension to your thing. So it's like you're already behind.
Oh,
Yeah.
that's a good point. Yeah, a lot of service members coming in, especially at certain hotels, I won't say which one, are being
Yeah.
like really held to that quarantine and can't even like leave their rooms to get food in the lobby or something. So.
Yeah. Oh, that's crazy. It has to be like all the way up. That's nuts. So it's definitely doable. We do it all the time. It's a really fun process. So let's say they've got their pre-approval letter, they found their perfect agent, they're ready to shop, and they find something to put an offer on. What do they need from you? How does it go from there?
Yeah, so they're ready to put an offer. We've got them pre-approved.
Yep.
So honestly, at that point, that's after I pre-approve someone, the next time I really step back in to work their file is going to be after their offer is accepted.
Mm-hmm.
But in the in between, I'm available to answer questions, run budgets, like what different houses would cost them monthly.
Yeah.
And a really big part that my team stresses is the same as their cover letter when they submit their offer, telling their story. I ask agents to CC myself and my team on the offer because I like to call the listing agent. I like to make sure that the listing agent knows that I'm here on island. I'm not in a call center on the mainland. I don't work 9 to 5 hours and turn my phone off or leave my office phone. And that especially for military loans, because the VA loan has had some myths and mistruths over the years. And a lot of agents have been doing business in Hawaii for a long time. And the VA loan has changed and gotten a lot better over the years. But if they don't know about those changes, then they may not be as likely to want to accept a VA loan. And so I like to call the listing agent and answer any questions they might have. Ask them, why would you not accept this offer if it was VA? And I love to hear their reasons because most of the time their reason is no longer true.
That's good.
I have a great example. We just submitted an offer today. On Monday, I called the listing agent. She's not taking VA offers. The realtor wanted to know if I could approve my client for a conventional loan. And this is a $900,000 house. This is a big home. And the VA would allow this veteran to put no money down and have a great interest rate. Conventional loans would require 20% to avoid mortgage insurance and have a higher interest rate. So I said, why? Why are we going conventional? And listing agent doesn't think it'll be VA approved. Great. Why?
Yeah.
And it came out to be a permit issue. The listing agent, which was true a few years ago, there's almost 1,000 square feet of this house that's unpermitted, which is a lot.
Yeah.
But I called the listing agent. I said, hey, I just wanted to let you know, I actually worked with the VA, my team, a few years ago. We were part of the kind of conversation that got the VA to agree to just appraise homes the same way conventional loans do, which is if it's unpermitted, it still has to be health and safety. Health and safety is a factor, and it still has to be structurally sound. But if all that's good, you just don't give it value as a permitted area. You just do the appraisal as is.
Yeah.
And we talked through it, and she was like, I didn't know that. Thank you. Can you send me something from the VA confirming it? Which we got her that information. And we submitted our offer today, and it's looking pretty good at getting accepted.
Yeah, that's awesome. That's a great example. And I can test it too. Like, you're great on text anytime we have a question, and the buyers are like, oh, how does this like play out with the number wise? Are we still able to afford it? Because things vary, you know. You're always so on it, which is great for people. So thank you for that.
Awesome. Yeah.
Okay, so let's say offer is accepted. We're ready to go into escrow. Can you kind of give us the 101 on that, and what's the timeline like? What's expected next from people?
Sure. So generally, your offer is accepted. The quickest thing for the client or the customer to do is turn in their earnest money. That's generally within the first few days. For me, my team is getting the accepted offer from a transaction coordinator or yourself, and we're inputting all that information into the file we already have built. We have everything basically except the property. So we're adding the address, adding all of the file contacts, who's the escrow companies, all of that. And within the first few days, we're going to send out kind of an estimated cost sheet and different interest rate options. So as soon as the offer is accepted, we can lock in that interest rate. And so we're sending out different options. Basically, the lower your interest rate, the more your closing costs, and the higher the interest rate, the less your closing costs. It's kind of like a seesaw. And there's always, on any given day, we call it par, but that's kind of the middle ground. It's where your costs aren't going up and your costs aren't going down. It's kind of like the middle for the interest rate.
Yeah.
So we send that out, and the buyer chooses that and is going to get, for lenders, we have a timeline. We have to send those hard initial disclosures to you within 3 days of getting your contract.
Okay.
And so those go out. The buyer needs, especially if we're in a quick timeline, because we can't move forward until those are signed.
Okay.
The buyer goes in and signs those. Now, it's really important. The buyer's not obligating themselves to anything on the loan at that point. Their signature is just saying, I got these. You sent them to me, and I acknowledge I received them, and I want to proceed forward in some way, somehow. You can still change your interest rate. You can still change your down payment, within the terms of your purchase contract, but that initial signatures for your initial disclosures aren't obligating you to anything.
Okay.
It's just letting the lender proceed forward and saying, like, hey, I got these.
Mm-hmm.
We're going to generally, depending on our timeline, if it's a 30-day contract or something really fast, we order the appraisal immediately, typically. If we have a little bit more time, we'll wait to order the appraisal till after your home inspection. Because if you find something during the home inspection that changes your mind and you don't want to buy the house anymore, we don't want to order the appraisal. On 30-day contracts, we don't really have that luxury. We need to order it ASAP. And the appraisal and the home inspection are typically the two things that sometimes get paid up front. So that's, besides your earnest money, typically buyers should have some expectation to pay your home inspection or appraisal up front. It depends on the buyer situation. If we have active duty military that doesn't have a lot of money in the bank because they're PCSing and they haven't gotten reimbursed yet, then we can move those things to be paid at closing. It's kind of case by case. But we get the appraisal ordered. We have all of your documents. If we need to update anything, if it's more than like 30 or 60 days old at that point, bank statements, pay stubs, stuff like that, we get that updated and we get everything into underwriting. Generally, processing and underwriting takes about 2 days each, so a week. And then the underwriter gives us a set of conditions back. Hey, based on everything you submitted, I would like this updated, or I'd like answers on this. That's the really important part of the pre-approval. If we do our jobs up front, and it's a little bit of a pain because we ask for a lot of stuff, but the intention is so that when we get that conditional underwrite back from the underwriter, your conditions are very simple. Maybe just pick your insurance and give us updated bank statements.
Yeah.
because the time you don't want to be stressed getting documents is in the middle of your purchase contract. You want to use that time during your pre-approval where you don't have deadlines to
Yeah.
get all the documents in. So depending on how we submitted that file, how clean it was, how much we had from the customer up front, we get conditions back. And at the same time, we're waiting on the appraisal. Appraisals for VA have to be done within 10 days of ordering. That's their timeline. And
Yep.
conventional is typically between 1 and 2 weeks. We see those come back. Sometimes longer. Right now during COVID, we are seeing my conventional appraisals are taking sometimes like 3 weeks. So.
Yeah.
And then we have those, so we're tracking the borrower and the property. So we have the appraisal and we have all the conditions back from the borrower. We put those together and submit for final. That goes back into underwriting for a couple days and then we get final loan approval. Here in Hawaii, we can sign as soon as we have final loan approval. And typically the way that works is that the borrowers will sign their docs. Depending on the time of day, we can either fund next day or at least 2 days later. And then Hawaii takes 2 days to record or give you keys. So if we get final on a Monday and sign on Monday, then you could have keys by Friday.
Nice.
Now, every lender is a little different. I used to work for a lender that couldn't sign the day they had final, but they always funded next day. So what it looked like with them is if you got final on Monday, you could sign Tuesday and still get keys by Friday. So either way, it takes about a week, but depending on the company, it may just be different days in signing and funding.
Yeah.
But it takes about a week.
Yeah, that's good. I mean, it's definitely like it's a whole navigation and it's very overwhelming for people to even think about like escrow and all the 20, 50 things you got to do, you know, but that's where you just lean on your professionals, lean on your agent and your officer and just baby steps, one at a time, check box. We'll get through it for sure.
It's a big ask, but yeah, the biggest thing is that no one expects you to be an expert in all this. We do this every day, and it is a big ask. But if you trust the professionals, your team that you have, you know, they have your back. We're gonna make sure you don't need to worry about when these deadlines are or when this is due. We're gonna let you know. We're gonna walk you through it, and we're gonna make sure that if something comes up, this is the best way to get around it or to get past it. We try and just, if you sit back and relax, we'll take care of you. But it is, especially for first-time homebuyers, it's a big deal. Their first house is a big thing.
Yeah, for sure. There's a lot of emotion. So just trusting the people that we're advocating for you and teamwork for sure.
Yep.
Okay, so any last pieces of advice you have for first-time home buyers that are looking to buy in Hawaii? Local, military?
Yeah, just anyone in general. The biggest piece of advice I can give is kind of what I led with up front is just take a look. Have someone run a pre-approval, spend a little bit of time, send your documents in, and just find out where you are. Because even if you're not buying right now necessarily, it's so good to find out where you are because you know where you want to be eventually. And just getting that initial look. The other thing I forgot to mention is a lot of people are concerned about their credit score and their credit being pulled.
Yeah.
And there's no hard, I can't send you something from the credit bureaus that states this, but in general, with credit pulls, auto loans and credit cards are viewed one way and mortgage pulls are viewed another. And so I've pulled credit quite a bit. I help people repair their credit and build it. And mortgage pulls do not, unless you're having 10 different companies check your credit, which I don't suggest, but having a mortgage pull or two within a month's time or a couple months time is not going to hurt your scores. So if you are worried about having your credit pulled and that being the kind of gate keeping you from finding out where you're at, my suggestion would be don't let that worry you. Again, if you're using Credit Karma, your score might be lower when the mortgage officer pulls it, but that's just because it's the most thorough, deep searching credit pull that exists. And so at least you're going to have an honest truth of where you are, and that shouldn't discourage you. It should just be a good starting point to start building off.
Yeah, 100%. That's really good advice. Especially for someone that has a 6 month to a 1 year window where they know they want to buy in the future. Let's start now. Let's see where you are. then you can budget, get there, fix all the things.
Exactly.
That way you're ready to rock and roll for sure. Okay, so how can people get in touch with you if they want to know more or work with you? Where can they find you?
Yeah. So my website, rylan.maddox.com, it's just my first name and last name. Will take you to my Homebridge site, and there's a link to apply now. Or you can email me, rylan.maddox@homebridge. And then with the video, I'll include my cell phone. I'll include all the basic information if you have any questions or want to follow up.
Yay, awesome. And I'm going to add all this to the notes underneath too on YouTube so everybody can find you as well. Thank you so much. You're literally the best. I'm so excited to keep doing deals with you. So we'll be in touch. Yeah?
Absolutely.
All right. I'll talk to you later.
Have a good day.
So that's it. I hope you guys really enjoyed that conversation between me and Rylan. I hope you learned a lot of information, took notes, just to really prepare yourself what that process is. Yes, it's intimidating, but I promise you, once you get started, it's not scary. It's really not. And if you work with an awesome agent, you can work with a team to really get you the proper loan, the right situation for you, and in the end, the best home for you. So if you like this video, please give it a thumbs up. If you want to learn more and watch the next one, give me a subscribe. And if you have got questions, let me know. Leave it in the comments below, and I can reach out to Rylan or other people in our field just to get you the best answers we know possible. And so without further ado, I'll see you next time.